Okay, weighted average interest rate. Now, this is what step one could look like. Heck, I guess there could be a question as well. That's just what's the weighted average interest rate? It's definitely good to know. So let's see what we've got here. Now, I'm using the same information, but this is unrelated to the question we just saw because it'll get you different numbers than what we had. So just take this independent of the previous question, same information. This is the same, right? Step one, step two. Here's our example, right? Information's the same, $10,000 bonds, coupon rate at 8%. What's the weighted average interest rate on December 31st? All right, let's see. Well, the effective annual interest payments, we need to calculate what the effective annual interest payments are. And well, how do we do that? Now, if you remember, if you've taken FAR, if not, no worries. Right, the bonds we've talked about. We've got the interest expense versus interest payable. One is the income statement, one is the balance sheet. And what do we actually pay versus what is accrued? All of that. Okay, what is recorded on the income statement versus what is actually paid out here. So effective annual interest payments. Okay, we have 10 bonds, $1,000 each. So we've got $10,000 of bonds times 8%. That means that $800 of interest paid on July 1st. The company made a payment of $1,000, which you may have noticed. So that means that $200 of the principal was paid down. Because think about it like your credit card. Let's say you owed $800 of interest. Anything additional that you pay pays down your principal. As such, after this, we had original balance, credit card balance of $10,000, and I'll use credit card, as a synonym, throw it in there just to relate it to us. So as such, because you paid $200 of principal down, now we only have $9,800 outstanding. But then when you go to do the next calculation, well, because you made an interest payment December 30th, now the balance is only 9,800. So now you do 9,800 times 8%. So that means that you only owed $784 in interest. That means that now more money, 216 went towards principal. You see what we did there? We are slowly paying down the balance that we owe. Effective annual interest payments, right? That's $800 plus $784. This is our outflows of $1,584. Well, what's the debt outstanding at December 31st? That's $9,584. We get that because we have original balance of $10,000 minus $200 minus $216. Outflows divided by inflows. Outflows divided by inflows. That gets us to 16.53. That is great. Now you see here you can have a different weighted average interest rate from the stated coupon rate. Just a note there. Right. Wow, that was a good take on all of this. Lots of important points to talk about. Hope you enjoyed that. That was our weighted average interest rate, which could be the the first step there, right? So weighted average interest rate, after tax cost of debt, whatever the question's asking for, you'll be ready for it.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.